Let's also welcome on board Vikas Khemani and find out what he's making of the market right now. Vikas, hi, morning. Good to have you on the show as always. Down almost 12%, Vikas, now on the Nifty 50 alone from those 52-week highs. And, the list goes on. 12% fall in mid-caps, small caps down 12.5%. Nifty next 50 down almost 19%. Is the bulk of the selling behind us, Vikas? Or do you think there's more pain to go looking at both the global as well as domestic factors at play?
Yes, I think I believe that the bulk of the sort of correction is behind us. Of course, you can never say that this is over, how long it can last and all. But we are this is in the backdrop of a great last 2-3 years. We have had great run over the last 4 years. So when you have this kind of market, it is quite natural to have this kind of correction coming in the market. And we all know that, and we debated about the debate on the TVs few months ago was that markets are overvalued, there are frothiness and all. So I think it's good news that those excesses are getting corrected, and that also kind of again brings back to the point that basic to the fundamental, how quality, how long term approach to investing kind of holds true. So I think some of the excesses have got corrected. This environment, I mean, we have a little bit of global macro uncertainty with the due to a political change, how that will pan out. We've seen a little bit of change on the interest rate side. So all those things, I think, in my opinion, are likely to be around in the next couple of months. And that will basically kind of cause markets to remain either correct a little bit more or remain sort of in a very narrow range. And so I do believe that while index might hold on, there could be some more space for correction in the broader market. But that's again, I would say, like I said, that most of the sort of correction is behind. Many stocks have corrected 30, 40, 50%. So I think there are kind of interesting opportunities which are emerging and will emerge in the next couple of months. So one has to keep watch, and every year, I mean, very often the vintage of the investments, like what I think 22 was bad. 22 second half of 22, whoso invested made a lot of money. But so always there will be periods when the kind of corrections come, and they are more as an opportunity than really a risk or a threat.
But Vikas, do you think that it will be a while before we see a massive uptick in earnings across the board? And could the market then go into perhaps some time-wise correction?
I think again that it really depends on how the news flow play out. I mean, I don't see a very deep correction from here. I will be really surprised if Nifty breaks 22,000 kind of levels. So I mean, with that kind of mindset. But at the same time, like I earlier said, that I don't think markets are running away back in a hurry. And when that is the mood of the market, it is likely to kind of remain in narrow range and more consolidate around here. And really depends on how the situation plays out. If I think interest rate starts coming off, probably there could be runaway rally, but I don't see any time happening that in the immediate term. That might take some more time. And as and when that happens, you will start seeing that coming through. I see a scenario where probably if rupee depreciates, liquidity in the system could be good, depending on, again, we'll have to see what is new RBI's new approach in terms of managing FX. That will determine, how the liquidity scenario will be there within the domestic economy. So all those things are, I think, probably will get cleared. My budget is around the corner, so in the next couple of months, and that would probably determine the sentiment of the direction going forward. And hence, I feel no hurry, but at the same time, no need to panic.
To panic, Nifty is not going below the mark of 22,000. At least that's your, prognosis at this point of time, Vikas. But what about financials as a pack? They have been underperforming very starkly. I mean, HDFC banks and the rest haven't done much at all last year and even before that. Do you think 2025 will finally see a reversal?
I do believe that 2025 would be a great year for financials, probably one sector which will probably beat all sectors in this year. Last year, of course, we saw broadly underperformance. Fortunately, our holdings like ICICI Bank, Federal Bank, they stood out within that pack and did very well, gave a good positive return. But I think having said that, I think, we might see a great opportunity. We are seeing great opportunities in that space in times to come. So I think 25 could be a better year for that.
What within financials would you bet on? Large cap private banks, mid-level private banks, PSUs, insurance, brokerages, NBFCs? What part of it looks the most attractive if you had to pick up a pecking order?
I think, of course, we don't invest into much into small private banks. Our approach is largely large private banks and some of the large PSU banks. There, I think there's an interesting sort of value play as well. Many PSU banks have come to zero point 0.8, zero point 0.9, kind of book with reasonably 15-16% kind of ROE. So I think this will get corrected in this year. Many of them can give 30-40% return this year. Um, uh, I think we do like, of course, I'm not talking about stock specific, but generally we like insurance as a space, especially general insurance. We like, wealth management. I mean, they are all structural plays, wealth management, brokerages. They're structural plays. You have to kind of pick your bet. Uh, but they are more non-credit oriented play, which will, I think, continue to do well. Only thing is if market volumes become subside and you get a good opportunity for entry, I think one should kind of get access to them because those are very, very structural in nature.
Interesting. Um, Vikas, I also see in your notes that you are liking pharma and IT as well. Why IT? Because especially with the earnings that we've seen so far, there doesn't seem that the managements have clear visibility, at least going by HCL Technologies commentary, on what the future really entails. And they're not that confident about client spends either.
IT not doing well narrative has been going around for 2 years, right? And we've had multiple conversations in that. In last 2 years or last 2 years and 4 years, many of our IT stocks are up between 5 to 7x. In last 2 years, specifically when the narrative is more prominent, our IT stocks have been up between 50% to 200%. So I think it boils down to picking up the stock. Of course, the large name and the bigger names might not have kind of done well, but we've been holding HCL Tech from 1100 to 1200 rupees. That's given a great return. We've been holding Tech Mahindra for quite some time. We've been holding Cyan for quite some time. So many companies, LTTS. So I think they have kind of delivered a reasonably good return. So I think there a lot of times the bigger picture get lost in the very quarterly kind of medium quarterly kind of commentary. TCS has guided very reasonably good demand scenario. Now we will probably ignore that, but look at the one other company's sort of commentary. So I think broadly our view is that IT as a sector will do well because partly it's linked to there are three broad drivers of the growth. Our market leadership in that space. Every time there's a constant technology disruption, you need more of IT services, especially kind of companies like Indian companies, which so let's say cloud. People can do cloud migration, but ultimately the migration, Microsoft can sell Azure, but migration has to be done by the IT companies and aging population everywhere. So I think you need more and more technology and more people to do that. So these three factors will keep driving the IT sector for quite some time, in my opinion. And you have to constantly keep looking for high growth spaces in that. I'm not saying every stock will do well in the sector, but we've been quite happy with our IT portfolio in last 1 year, 2 year, and 4 years.
Been quite happy with the performance that you have seen of your IT portfolio, but have you been happy with the kind of performance that we have seen from auto stocks? Because last couple of years have been very strong in terms of the returns on the stock price, but come the festive season, there was this moderation that happened, both in terms of stock price and of course the fundamentals as well. How would you rate the future of the auto sector now?
Absolutely. See, this kind of, again, I would say intermittent correction slowdown is part of any sort of industry. I had actually lightened our holding in auto about 2 quarters ago, and we made a lot of money in that. But right now we are underweight on the sector. But there's nothing wrong with the sector. Demand will be there as per capita income goes up. Consumption will be there. So I think it's just an intermittent cycle right now, which will come back, and we are keenly watching. But currently, we own companies like Mahindra, which have done phenomenally well. So I think we generally don't kind of push aside everything in the sectors. Within sector, we are owning still some names, and we continue to kind of believe. But jahan pe significant corrections have happened, I think we will look to enter at the right point in time.
The point taken. That's the view coming in as far as the market setup is concerned. On autos, of course, Bank of America this morning has upgraded the likes of Maruti as well as TVS Motors. Bharat Forge, they have downgraded. Just watching out for some of those stocks in the trading session as well. But Vikas, you've been very positive and vocal about the Viksit Bharat theme and the manufacturing theme as such. Do you think it's in the price quite substantially now if you're looking at a 3 to 5 year horizon?
I think it's a very, very long-term opportunity. I think again depends on what one's view is, what time horizon is. If you're looking 1, 2 quarter, I don't know. But if you look at 3 to 5 years, for sure not, because I think manufacturing as a sector will see significant growth. Our total GDP, which is about 550, $600 billion, will go to $1.5 trillion. And that kind of growth is there in the sector. So I always say it is where IT was in the mid 90s. So you will see massive growth. Of course, within that cycle of, you will always see intermittent corrections. You will always see pain periods. But structurally speaking, if you understand that, then there's a long way to go. And it's not that when we are saying we buy every stock, every sector in manufacturing and remain invested. I mean, we also take our, intermittent calls. We sold all our chemicals in 22, but we entered in chemicals in 24. And but chemical structurally continues to remain a very big play over next 10, 20 years. So that's how kind of you sort of play intermittent cycle. And that requires, of course, detailed knowledge of each sub-segment of the manufacturing, because manufacturing is a very wide subject. There are many sectors within that. And but I think structurally speaking, it's a very, very, very large long-term opportunity.
Because if you had to pick out that one structural theme for the year ahead, which you think is going to play out well, which one would it be? Because, start of the year, one was talking about whether premium consumption has more legs to go and whether that would continue to grow or not. Of course, the capital market themes also has been quite the structural one. And then the entire energy transition theme is being called as, the decadal play. But if you had to pick out just one.
I think, again, it's very hard to pick up one for a year, because I think just change of calendar year doesn't change anything, right? I mean, themes and trends don't play out based on the calendar year. They play out based on, long-term cycles and all those things. I mean, one can really say that what is likely to do well in probably next 12 months time, which is where I said banking, financials will do well. Pharma and healthcare, I continue to remain very, very bullish. I think, and this year also should be good for them. I mean, so again, you look at, but structurally trends don't change very often. Trends continue and they'll outlast for many, many years. And like some of the trends you mentioned, they will be around, and they are around. They will be around for many years.
Okay, point taken. Thanks, Vikas, for joining us today. So some of those long-term themes is what you really need to watch out for. Calendar years don't really change the performance and the fundamentals of the sector. Well said there.
If you like this video, then like, share and subscribe to ET Now.